evening, ladies and gentlemen. Welcome to the Chinese Building Association of New South Wales. I'm Andy, and I'm honored to be your host tonight. First, I would like to introduce our Building and Development Show. This is a new project that the association started in March this year. We have invited leading experts, institutions, and professionals in the industry to share the latest information about 4 major topics: development, construction, real estate, and renovation. The purpose of this show is to, first, to help the Chinese community increase knowledge in these 4 areas. 2, promote the services of our members to the Chinese community. 3, to enhance the association's standing in the industry. We welcome members with in-depth expertise in these topics to come and join us so we can create high-standard and practical content for our audience. We sincerely hope that you will support this show and that it will provide you with practical input and valuable opportunities for further networking and learning. On the left of the screen is the QR code for CBA New South Wales WeChat official account. We have weekly content updates about the latest news and our events. Please subscribe to receive exclusive information and event opportunities. Also, we have WeChat groups specially dedicated to our builder members and friends. If you wish to join, please add our CBA New South Wales Assistant WeChat by scanning the QR code on the right. The assistant will add you to the group once your identity is confirmed. Thank you so much for your cooperation and support. Next, I would like to thank the sponsors on the screen that continue to contribute to the future of the association. With your ongoing support and trust, the association will continue to provide high-quality content and networking opportunities. If you would like to support our building and development show, you can do so by sponsoring our events. We will host more quality events with your support. If you would like to sponsor one of our events, please contact our CBA New South Wales assistant, and we will look forward to hear from you. Next, we come to the most important part of the evening. I would like to introduce our special guests from Coverforce. Coverforce is Australia's largest privately owned insurance broker. They have been providing smart insurance solutions to businesses since 1994. Their team of insurance brokers provide professional risk advice and insurance solutions to a diverse range of clients throughout the country. Now I would like to invite Managing Director of Coverforce, Andrew Ferguson, to come up to the stage to talk briefly about Coverforce and today's speaker, Renee. Let's put our hands together for Mr. Ferguson.
Thank you very much, Andy. I want to acknowledge Hal and Carson and the executive of your association for the great work that's been done in creating the Business Council, and obviously acknowledge the members that have joined and that are participating in the many good initiatives of the association. Carson rang me this afternoon and said, I know you're on the local council here and can make a special effort tonight to make sure no one gets booked. So all being well, if you park illegally, hopefully you won't get a fine, and if you do, just send it to Carson and hopefully he can fix it up for you. But as Andy said, we are the largest privately owned insurance broker in Australia. It's a family-owned business, just like many businesses here, and the owners of the business have got their hands involved in running the business, doing insurance broking, and doing face-to-face work with clients. And we're very committed to your industry. We've got a team of 100 in our Sydney office, and we've got another office at Bankstown in Western Sydney. The majority of our clients are builders, developers, and people supplying to the building industry, glass companies, concrete companies, and so on. And we're very, very committed to the industry. I spent 30 years in the construction industry, and I also am very committed to it. I'm very proud that an important part of our business is home warranty insurance, and I'm sure there's many people here that've got an interest in home warranty, how it works, and trying to increase eligibility. inside our business, we have a team that does nothing but home warranty. They specialise in it. They do it every hour of every day, of every week, just doing constant home warranty insurance. And we're one of the 9 companies authorised in New South Wales to do home warranty. So we've got a head of our corporate services here tonight, Renee. She'll be doing a presentation in English, but I'm sure she'll communicate well with you. And if you've got any questions, there'll be a period for questions and answers. And then at the end of the evening, we can talk to each other and see if we can assist your business. So I'd leave it there, and thank you very much for the opportunity to be here, to sponsor your event. And I want to say to you, we're not here for the short stay. We want to be partners with your association and give a long-term commitment. So very much, Carson, for the invitation to be here tonight. And I'll formally introduce Renee on Andy's behalf, if that's okay.
Yeah, that's right.
Give Renee a big clap.
I will also just introduce our another speaker, which is Kevin. He is the KPMG's Associate Director and Sector Specialist for Real Estate and Construction, Kevin Min, and he will also give us some information while Renee is going to give us the presentation. He will give us more information regarding to the finance sector. So let's put our hands together for Kevin.
So I'll just reiterate Andrew's comments and say thank you for having me here tonight. We appreciate the opportunity to speak to you. It's good to come out and be in front of builders, and it's pretty nice to see some familiar faces in the audience tonight. It's this thing, isn't it? Yes. Yeah. So what I'll do is two parts. I know you guys mostly are really interested in hearing about eligibility and how to work on your eligibility limits. So I'll just go through Cover Force and what Cover Force does. In relation to builder's warranty, and then I'll talk through the detail on how we can assist you with your limits. And it's good to have Kevin here today because most of you will need some financial advice from your accountants or etc. because some of the questions can be quite tricky around your business assets and your business finances. So Andrew's already stolen my thunder with this slide, just explaining who we are and that we're one of the 9 distributors that are currently selected in New South Wales to distribute builder's warranty on behalf of iCare. And we do have a dedicated team in our Barangaroo office in Sydney. That's the model that we've adopted. These are some of our key staff, and we've just employed another manager for builder's warranty, Mr. Wayne Manley, who you might have known previously from MBA. One of our roles in builder's warranty as one of the distributors is to make sure that our clients are educated on builder's warranty and the continuous changes that happen in this space. So if any of you have been in the construction game for quite some time, you would have seen quite a lot of changes in builder's warranty over the last few years. Mostly good, some really bad with the limit increases, the rating increases that iCare put into place. Our role here is to ensure that our clients understand what's happening, and we do that through a few channels. So all of our social media channels will communicate changes on builder's warranty, and also we've got a very robust website that explains everything that you need. We communicate directly with builders, so we have a builder's warranty team, as Andrew said, just dedicated specifically to doing builder's warranty insurance. You deal with that team of people. Anybody in that team of people can talk to you about your account, but you'll get a dedicated account manager as well. We'll communicate with you directly on everything that we need to do in relation to your eligibility in any projects. We'll represent and advocate for you when we're applying to do your limit changes in getting limit increases, and we also obviously invoice you directly. There's a slide there on our service commitment. Basically, we try and turn things around as quickly as we can at Cover Force, so we're very customer focused. So we're committed to doing project applications within 1 or 2 days, but normally our office will turn them around to you within 2 to 4 hours. I won't go into the details of all of that because I know that it's going to be communicated to you guys, so you can look at it later on. And now I'll come to the key part that you all want to hear about tonight. So I'll talk through Hpcf and eligibility. So first of all, I might just explain what Hpcf is. So if you're a builder in New South Wales and you want to do residential building works and the contract value of that works, including GST, is $20,000 or above, then you have to have Hpcf insurance for that project. As a builder, you can't just go anywhere or to any broker or an insurer and buy Hpcf insurance. You have to go to a Hpcf distributor, and Coverforce is one of those 9. And you also have to have already applied to buy this type of insurance. It's not like purchasing a public liability policy where you just pay for it once and there's a limit of indemnity. You purchase this insurance for each project and you have to have previously applied to be authorised to do so. So as I've explained, there's 2 steps here. First, as a builder, you need to obtain Hpcf eligibility. And if you do already have it, you need to maintain that every year. And there's an assessment process that goes with that, unless you're a small builder that they've deemed to be automatically assessed. And the second part of being a builder that can purchase Hpcf eligibility is you'll buy the project for each insurance. So you apply for the project, you will pay for the insurance for that project and receive a certificate of insurance. Every certificate of insurance you buy takes away from the initial limit that you applied for, and every time you finish a job, your limit goes back up. This is really small on there. So when I might have to turn to this, is that all right? Yeah. So when we talk to you about applying for eligibility or changing your eligibility limits, there's a certain set of steps that we go through. So the first one is we'll have a chat to you as a builder and talk to you about your business, what your sales pipeline looks like, how many jobs you've got, what the value of the jobs are, what type of work you do. And from that, what we'll do is decide, we'll talk to you through the process of applying. So the process of applying is simply giving us an application form. There's a whole heap of supporting documents that go with that, and I'll explain those in a minute. So once we've got that application form, it goes to an underwriter to make assessment. So it's not your normal underwriter. We can't go to QBE and CGU and Chubb Insurance. It's not a normal insurance policy. It all is underwritten by the ICARE and the government, and there's one underwriter that we have to go to for the application. All the 9 broking distributors go to the same underwriter. So no matter what broker you go to, it's going to go to the same underwriter. The value that you get from your broker is how much they're going to help you put that submission together to get the best outcome for your business. So once it goes to ICARE, they normally take 10 business days to assess it. It should run as smoothly as that if you've got all of your information in order, and that's our responsibility to help you get all of your ducks in a row. And once we've got that outcome from ICARE, we'll let you know what your eligibility limit is that you've been approved for, and then also how many jobs you're allowed to apply for. Occasionally they won't be happy to grant you the limit that you wanted, or they'll need additional information from you, and we'll talk you through that. And sometimes that can be more information about your business assets or understanding why you've requested the limit that you've requested. So as a broker, we'll speak to you, get that information from you, and we'll provide that back to ICARE. This is a list of supporting documents that you'll need to provide as a major builder, but as a smaller builder, a lot of them still apply. And the reason I put them up here now is because I'm going to step you through what ICARE does with these documents. When you apply for eligibility, I might take a step back. Builder's warranty is a legislated insurance that protects the consumer. So it's not an insurance for you as a business. It's an insurance that protects the homeowner that's going to purchase your services. That being said, what ICARE want to do is and the homeowner can only claim on that insurance if you haven't completed the work, or there's defects on the work, and your business is unable to satisfy and remediate those defects. So that would normally happen because your business has gone into liquidation, or the business is no longer trading, and the director's unable to be able to remediate those works. So this is really about an insurance making sure that the builders are able to complete the jobs, complete them to a good quality, and guarantee the works for about 6 years. In saying, understanding what that insurance is for, there's two things that iCare look for when they decide whether or not they'll let you as a builder purchase this insurance. So firstly, they'll look for your business to be a financially stable business that can support the level of works that you want to do. The second thing they'll do is look at you as management or the key management of the business and decide whether or not they feel that you have the experience, expertise and organisation to be able to run that business and to be able to run that level of work that you've applied to run. These are the documents that you need to submit to prove to iCare those two things. That you're financially stable and enough to do the work you want to do, and that you're organised and that you can execute those works to a quality standard where there won't be defects that they'll end up having claims for. So I just thought I'd put the documents up first. It looks a little bit overwhelming, and there'll be some things that won't apply to a smaller builder, but I think it's important to understand that these are the requirements that are there. So I've touched on these already. They'll look at these criteria, your financial performance, and they normally look at that over the last 2 years. A little bit of a different situation for startup companies. They'll look at your financial position, and they do this with two measures. So the first one is adjusted net tangible assets. What this is the difference between your business assets and your business liabilities. They do weight some things. So if you've got debtors or creditors over 30 days, they won't actually give those, they won't include those, they'll only include anything under 30 days. And I'll talk to that example. They want to know that you're collecting and paying your money in a timely fashion. So ERTA, they want to know that you've got about 3% of the limit that you apply for. So if you're to apply for a $1 million limit, I'll put myself on the spot with this example, $30,000 ERTA, and that's the net position. So if you've got cash in the bank of $30,000 and you've got a loan of $30,000, your net position is zero. So you've got to have that $30,000 ERTA surplus. And the second thing that they do is look at your working capital. So your working capital, regardless of the limit you apply for, is your ability for your business to trade, your cash position to pay your debts as they arise. They'll look at your history and your management structure. So one thing that they don't like to see is directors that have been part of a business that's gone into administration before. They pretty much cut that off straight away. There is extenuating circumstances where we can apply and have that put through their committee to potentially be approved. And there has been situations where I've been able to get that approved, but they all come down to their own merit. They'll look at your performance, if you've done those types of jobs before, if your nominated supervisors have been able to run the types of jobs that you're running before. They want to know that you've got the experience to be able to do those jobs well, including looking at your technical qualifications. And sometimes they'll actually ask for business references, building references to know that you're able to, from other parties to know that you're able to do those works. They'll also look if you've got existing eligibilities in other states or if you've got any conditions imposed by other licence holders. So depending on how well you guys fare as a business under all this stipulation, they'll then decide whether you should pay the normal premiums, you should pay an increased premium, or they should discount you. So if they look at you as a business and they think, look, you're a really good business, you're financially stable, been around for 10 years doing this work, you'll probably see yourselves receive a discount. If you're a startup business that doesn't have much cash and you've only been a builder for a year, you may not get eligibility at all, and if you do get it granted, they may load your premium, so you may have to pay an additional 30%.
That's Emma's phone.
I don't know who this is.
Emma Lee.
At this point in time, does anybody have any questions?
This is
We have a question.
Any questions from the audience yet? It's probably a good break spot.
I get a question for you.
Kevin has a question for me.
For startup companies, right? And what's the quickest way to get, say, I need 2 mil eligibility,
Yeah.
and I'm only starting this company this year? Is that the simplest way? I just put the injection for the new shares in the company to get a 2 mil.
Yeah, so a lot of people do, a lot of other things in life do come down to just a cash injection somewhere or throwing money at something, and that's not the only side of the application that they'll look at. So they will want to see the cash in the business to run the business, but they'll also look at you as a business owner and say, how are you going to get this work? What are your qualifications? Do you have the experience to do the work? And one way as a startup business that you can convey that information is by providing a business plan. And that doesn't have to be really detailed if you're a smaller builder, but it's just got to cover off who your key people are, how you're going to project manage the jobs, what you do to ensure your subcontractors are providing quality work, what your approach to paying your bills and getting your money out of your homeowners. All of that documented in a really simple business plan helps them to have some confidence that you know how to run the business, this startup business that you've started. And you'll normally need that to kind of work with banks and those sorts of things as well. Any more? Kevin? Not yet?
Thank you very much. Anyone else who have a question? Or you can, yeah.
Sorry, it's kind of similar question, but it's not exactly a startup company. Our old company already got eligibility of 4.5 mil, but we want to restructure the company and get a new company, with different shareholders.
Yeah.
So in this case, for the new company, so can we share some of the credibility of the old company, or is a totally new assessment?
So,
Thank you very much.
you can't, there's very specific situations where you can share company money, directors, etc. So the shareholders we don't really care about, they're just people that receive the income, they're not necessarily decision makers. So ICARE will care about the directors of the businesses. So if you've got an old business and a new business and they shared common directors and there's like some sort of information tying them, normally in related party loans, then we can put that into what's called a group trading arrangement. But there has to be a relationship between the entities. And what they will do in that situation is look at, if you can put it into a group trading arrangement, they will look at the oldest company, and that I'll go through what the impact that has in a minute. But if you can't relate the companies, if they have separate directors, no related loans, and they're unrelated entities except for the shareholders, you won't be able to put that into a group trading arrangement, and that will be a new application for that new entity on its own merit. Does that answer?
We do have the same directors.
Yeah.
Of course, different shareholder, but we got same directors.
Yeah.
So in that case, can we use the documents of the old company to apply for the new one, or?
You can't use the documents from the old company because most of the documents are financial documents. So you'll have financial statements, your aged debtors, your aged creditors, your sales pipeline. It's all about the work for that entity. But if you've got an operational plan and that no longer applies to the old company and does apply to the new company, that's up to you if you wanted to use that. And your standard contract and your standard payment terms, those things could translate, but your financial statements wouldn't necessarily translate from your old company to your new.
Yeah, they don't really have that kind of financial relation. It's basically like restructure the old company and start a new one. And in that case, the old company, their credibility, you just consider as a tiny little benefit part, or you can use assess a new company based on the performance of the old company.
No. So the financial assessment, it's got nothing to do with the old company. They will look at the directors and say they successfully ran that previous company, but if that previous company was put into liquidation to finish, that would be a very bad thing and unlikely for that director to get any eligibility on any organisation for 5 years. Yeah. They'd also probably inquire as to why. They would want an explanation as to why you've done that change. They'd want to know that. And they'd be wanting to make sure that you weren't avoiding any liabilities by doing that. Yeah. So I've explained kind of the things that they look at when they're assessing your eligibility, and these are also the things that will impact your premium. So they go hand in hand. So if you're a sole trader or a partnership, you'll normally get a little bit of a discount because it's less liabilities there. Entities that have been licensed for a shorter period of time will normally get a loading on them because they haven't got that length of time. So they normally look at, there'll be a certain loading for under 3 years, 3 to 5 years, 5 to 10 years and 10 years plus. So as you trade for a longer period of time, you'll start to get a more discounted premium. And so that's where it's important. They'll see the history on a company like that, and you're more likely to, if you did change from old company to new company, and old company was stable and had been around for a long time, moving to that newer entity, more than likely to get a higher premium on your projects than what you had previously. So I've talked about ANTA. The higher net tangible assets that you have in the business, cash contributes to that, all the business assets minus the liabilities. The better that financial position is, the more likely that you'll, one, get assessed and approved, and two, the higher that is, the more likely you'll get a discount on your premium. Looking at your net margins too, they want to see that you're a sustainable business that's going to scale or continue. So you either continue performing at a stable rate, or if you're growing, they want to see that you're growing in a stable way, so that you've got a proper margin there to continue running the business. So entities that have got a strong margin, more likely to attract a discount premium. Entities that have got losses are very more likely to attract a loading impact. So this is probably where it's key to have the right conversations with your accountant as to there's a fine line between the profit at the end of the year versus the impact that might have on your builder's warranty. So I've touched on what we call adverse history. If you've been a director of a business that's had significant builder's warranty claims, or a business that's been not even put into liquidation but just haven't been have notification of liquidation, and there's unpaid creditors, they will see that as a risk, because at the end of the day they only have to pay these claims if you are unable to rectify these works yourself. So if you have been part of an organisation that has wound down previously, it's either going to be what they deem a critical situation where they will decline the eligibility if that person is involved in key management, not just a director, or if they do decide to take on that risk in a very slim circumstances that they'll take on that risk, more than likely you'll have to pay higher premiums. They like to see audited accounts. So if you've got good financial controls and audited accounts and you're auditing them annually, getting them signed off, then you're more than likely to attract a discount. Sorry. That's all. So all of these things contribute to the success of your application and what your premium loading is in the end. There's no tricks to this. It's a government agency looking at it. So there's no commercial weight we can throw around as a broker. No broker can do that. We can help you prepare the submission in the right way to put the best business case forward. And
she normally has whiskey, but I'll do some.
Yeah, so we can talk to you about presenting your business in the best way. And for those businesses that are on a really good trajectory because the market's really good at the moment and your limit's increasing, you want to increase limits regularly, you should apply for your limit, what you think you'll need for the next 1 to 2 years, whatever's in your sales pipeline. But we can work with you to help you prepare your operational plan to convey to the underwriter what you're doing to manage your business well. We can also line up direct meetings with the underwriters so that you can put your business case forward to them and they can have the best understanding of how you operate. That's about all I have to say. Does anyone have any further questions for me or potentially for Kevin?
Sorry, just one quick question regarding the strong net margin. So, like when you describe it strong, what is the percentage?
Oh, put me on the spot now. Do you know, Kevin? A strong net margin. I think it's around 10 to 15%, but they want to see that consistent too. So it's two things, it's hitting a certain mark but being consistent too. So if your last 3 financials kind of see you bumping around, they'll look at that as not a stable business, that you don't operate consistently. And you know what? Sometimes things happen in business. There's circumstances that you can't prepare for. Maybe a managing director got sick for a small organisation and you had to put on another supervisor to run the work because you would have normally run it yourself. We just have to present that information to iCare. So we've had an example like that, where a managing director of a very small landscaping business was unable to perform in the business himself for about 18 months. That wage was a pretty big hit on a smaller business and it impacted those margins. We were able to explain that and present a business plan that he was back in the business and that margin was going to turn around in the next year or two.
But which one, for example, the other question is which kind of margin is better? Is it in percentage or in value is higher? For example, in 1 year, I'm doing 10 projects and I'm earning $500,000. But the other case is it's the same thing, but I'm earning maybe only 5% of margin. But in other case, maybe I'm earning 20% of margin, but also in 1 year. But I'm not doing 10 projects. I'm doing, for example, only 5 projects.
They don't really, it's not about what you are or aren't doing. Each business will be different here. I know there's a full spectrum of major builders down to smaller builders. They basically need to know that you're not working for nothing, because if you are, you might wind the business down, that you've got a sustainable margin there that keeps you interested and keeps you in business. And that the business, they'll look at it as to whether or not the business is in risk of liquidating. So they just want to see that to be healthy and consistent. And if it's not consistent, just an explanation as to why, and maybe a business plan how you would turn that margin around. So if that margin is a strong margin for your business, that will be fine.
Thank you very much. Is there any other question or any Chinese question for Kevin? Is welcomed as well. Anyone? Don't be shy. Okay. Sorry.
If we want to transfer our existing policy from another broker to your company, so would the assessment procedure still the same like a new application, or is it easier?
So you, as a builder, choose your broker. I probably should have gone into detail about this. So to move your policy to us, there's no additional application. So your application is always with that same underwriter, and you just choose the broker you want to deal with on the policy. However, I'll just explain the application process. So when you first become a builder, you need to apply for eligibility. And depending on your size, I think around 50% of builders will have to do an annual or half annual review. So what that review means is whatever iCare or the underwriter deem so 6 months or yearly, you'll have to resubmit your documentation because they want to know that your financial position, your operational position hasn't changed from last year, that you're still able to sustain those works. And every year, regardless of your broker, you have to go through that assessment. So to appoint Coverforce as a broker, or to appoint another, I don't know if I'm meant to be swinging, do I swing it Coverforce's way? Yep. To appoint Coverforce as a broker, it's simply signing a letter of appointment, and Andrew's handed out my card so we can give you a template for that, just assigning Coverforce as your broker. It will flick over in 2 days' time, but you'll only have to put the application through if you're due for an assessment or you want to change your limits. It's probably important as well to understand that applying for a higher limit is not always going to be a good thing if you're not financially ready for that. So iCare will only grant you a limit that they're comfortable with. We've seen some builders really want to apply for a higher limit. We've recommended that they don't because their financial position has changed, because every time you apply for a limit or every time that you do an annual review, they assess you and they could potentially drop your limit if they think your financial position has changed and you're not able to sustain that limit anymore, or if you don't have the sales pipeline to sustain that limit. So we do have a lot of builders that will come to us and say, oh, I really want $20 million worth of home warranty, but their pipeline's only 3. So there's no way iCare will say, yeah, we'll give you 20 if you've only got $3 million worth of work. They really do a lot of checks and balances to ensure that it's the limit you need, you're financially able to carry that limit, and you've got the people and the organisation in your business to conduct those works. So I've tried to talk at a level that works for everyone. Some of the stuff I've talked about is a little bit high or not required for the really small businesses, and the requirements for major builders, so $15 million limits and above, might be a little bit more detailed.
Thank you. Is there any other questions? Any other questions from anyone?
So Andrew's, I think, handed my card out to most people. I didn't bring enough with me, but he's got other cards he can give you. Feel free to contact me, Andrew, or Joyce. You'll see our names on those cards if you wanted to talk about your specific building circumstances, or if you're interested in us handling your account, we can help you with that as well. We do also general insurance broking, which I think Andrew's probably touched with you guys. So we don't just do builder's warranty, we do the full spectrum of insurances.
Thank you so much. Thank you.
Thank you so much for having me.
Do you have anything to add, Kevin? No? Okay. Thank you very much, Renee, for the great content you provide. And I see a lot of friends who are taking photos for the slides. If you want the full version of the slide, you can just add the CBA New South Wales assistant, and we can provide you a full version of the slide after the event, which is this one. And so thank you all for joining us tonight. And in consideration of our neighbors, we have closed our main entrance, which is the entrance that everyone comes in. Please follow our colleagues' guidance to exit from the side door after the event is finished. And also, our association keep providing supports for all of the building businesses. And if you want to become a member of the association, please talk to the assistant as well. And we will hope to help you further in the future. Thank you very much for attending to our event, and see you next time.